Let's now quickly revise accounting standard 16, which deals with borrowing cost. Borrowing cost usually refers to the cost incurred for borrowing the money, giving you the first impression that it is dealing with interest. Interest is form of borrowing cost, but interest is not the only thing which will be called as borrowing cost. The word borrowing cost will include several other things. What and all will it include? Like in the case of accounting standard 19, finance lease, when we take an asset on lease for which we are making the payments in installments, we might pay them much more than the cash price of the asset. That excess money paid, what we call as finance cost or unearned finance income in the books of the person who's giving the asset, that is also borrowing cost. This will be computed as per AS 19, but it can be treated as borrowing cost as per AS 16. Next, interest and commitment charges. When we take loan, we pay interest. That interest is borrowing cost. If we give them commitment stating that this money that I borrowed, I'll repay it after 3 years only. Even if I repay it at the end of second year, I'll still pay third year interest or I'll pay some compensation like your prepayment charges in loan. That is also to be considered as borrowing cost. Then comes the interesting topic of discount or premium on borrowings. If in case the borrowing is in the form of debentures, at the time of issue of debentures, if we give discount or on redemption of debentures, if you are paying them premium, that discount on issue or premium on redemption would have done this. No, discount on issue plus premium on redemption is loss on issue. That loss on issue is also to be treated on par with borrowing cost. Then next topic is about amortization of ancillary cost. If in case to take this borrowing, you have incurred some expenditure, that expenditure will also be amortized along with the borrowing cost. So that's also part of your borrowing cost. And there's one last beautiful item. This is exchange difference. Usually, the borrowing will be in Indian currency in an Indian bank. If in case you have a borrowing outside India in a foreign bank, like foreign currency borrowing, that foreign currency borrowing has to be restated at the end of each year because it is a monetary item. We've discussed this in AS11. If you want, please go back and revise AS11 after this. So when you restate a foreign currency borrowing which is there in a foreign currency, from the recording date or reporting date to closing date, that difference, what appears to be exchange difference, can be construed as not foreign exchange difference, but can be construed as borrowing cost to an extent. To what extent? That we'll discuss towards the end of this video. Now, going further, all these items, FIDAE, what we call as FIDA, will be called as borrowing cost. Usually, before accounting standard 16 came into picture, we feel like transferring this borrowing cost to P&L. But accounting standard 16 wakes up to tell us that if in case this borrowing is made to buy a qualifying asset or to build a qualifying asset or to install a qualifying asset, then instead of transferring this borrowing cost to P&L, add it to the cost of the asset, capitalizing the borrowing cost instead of transferring it to P&L. That brings us to the question, what is qualifying asset? Does it have to write an exam to pass? No. An asset will be called as a qualifying asset if such an asset takes substantial period of time for its setup. The asset should take substantial period of time for its setup. It should take substantial period to be ready. Sir, my friend takes more time to ready. Can I call her qualifying asset? You can call her qualifying assets, but I am not responsible if she slaps you. The point here is asset will take substantially longer period of time to be set up. The word substantial is not defined by accounting standard 16. Is it referred by any other accounting standard? No. Would have to refer accounting standard interpretation 1. ASI 1 says 12 months, but it is not 12 for all the cases. It is left to our professional judgment. Certain assets which take 11 months can be called as qualifying assets. If you think that time period it took, no, during that whatever interest paid, it is better off capitalized, not rather than charging to P&L. Sometimes if an asset takes 14 months, you can say, hey, this could have been installed in 8 months. By mistake, because of our delay, we took 13 months. Let us not capitalize. That can be a decision. So 12 months is not a hard and fast rule. The substantial period is left to professional judgment of the accountant. I hope you guys understood this part. Like I mentioned, whenever you take a borrowing, this borrowing includes FIDAE, and if it is incurred against a qualifying asset, instead of charging to P&L, we should add it to capital. We should add it to the asset. If it is not against qualifying asset, it should be charged to PL. What is included in the borrowing cost is this FIDAE. What is not included is any imputed cost, imaginary cost for raising equity or preference is not considered. Only on the borrowing. And the borrowing has to be actual. Can I say, if in case I had borrowed, I was supposed to pay 8%, Instead of borrowing, I've taken capital. I'll apply 8%. Can you apply? Apply 8%. But that's just for your noting. You can't apply A16 on that. It is not on imaginary interest. It should be actual interest. I hope you got it.
Yes, sir.
This borrowing, whatever we take, can be two types. One, specific borrowing. Two, general borrowing. Specific borrowing says, okay, I am there only for you. If you are not there, I am not there. I came just for you. Till the day you are there, I am there types. Meaning that borrowing is made only for the purpose of qualifying asset. When you're borrowing also, you told them why you need money. I need this money just for this asset. If not, I would have not taken money from you. And after we take, that money is used only for that. That is specific borrowing. Specific borrowing is a borrowing specifically made for the purpose of qualifying asset. On the other hand, what do you mean by general borrowing? It is other than specific borrowing, not borrowed for specific purpose. General borrowing money can be used for buying that asset, can be used to do party, can be used to do employee benefit expenses payment, can be used to do anything. Yeah, you can do anything out of it. So what we do with specific borrowing rate is we apply actual borrowing rate to compute the amount to be capitalized. With regard to general borrowing, what do we do? There can be more than one general borrowing. If there is only one general borrowing, we'll take that rate. If there is more than one general borrowing, we don't know which general borrowing is utilized. So if there is about three general borrowings, we'll write general borrowing 1, general borrowing 2, general borrowing 3. Interest rate on GB1, interest rate on GB2, interest rate on GB3. Multiply principal with interest individually, take the total interest, take the total borrowing, total interest by total borrowing. If you do, we'll get weighted average rate. That weighted average rate will be applied for identifying interest on the funds used from general borrowing. Are you guys getting it? With regard to a specific borrowing, we will start capitalizing the interest from the date of borrowing the money. However, on general borrowing, we start capitalizing from the date on which we spend the money. When I say date of borrowing, it is subject to the conditions that assets active construction has started, money has been actually borrowed, interest has been actually started. All the three conditions should have been fulfilled. Only then we can start capitalizing. When do we stop capitalizing? The day the asset is ready to be put to use. Is it different for qualifying, non-qualifying? No. Whether it is qualifying asset or it is non-qualifying asset, end date is same. That is the date on which the asset is ready to be put to use. However, beginning date for a specific borrowing will be date of borrowing, provided that the conditions are fulfilled. For a general borrowing, it is date of spending. Do you guys get that? The priority will be usually given to specific borrowing first. Let's say I've spent 10 lakh rupees on the asset. I have a specific borrowing of 8 lakh. I have general borrowing of 5 lakh. I will first use up entire specific borrowing for the 10 lakh asset. Balance amount that is spent on the asset after the specific borrowing is assumed to be taken from general borrowing. And during the idle period, like I have borrowed the money, but I have not spent it on the asset. When the money remains idle, like idly, on that if I earn interest income, that interest income has to be deducted from the borrowing cost before adding to the capitalized part of that asset. This facility is only for specific borrowing. Why? For specific borrowing, we start capitalizing from the date of borrowing. I borrowed today, but I spent next month. This month the money is idle. On that interest, what is earned will be deducted from the total interest, including this month interest has to be capitalized. From that, we deduct only leftover amount will be capitalized. From 1st of April, asset construction started. From 1st of April, you made specific borrowing. Specific borrowing money got spent only in 1st of May. 1st of April interest cost also can be capitalized because it is specific borrowing. During 1st of April, if there is some idle period and you earn some interest income, that will be deducted from the total specific borrowing cost and only then it will be capitalized. For general borrowing, this facility is not there. That interest income earned on the idle period will be going to P&L. Why? If I make general borrowing on 1st of April, if I spend general borrowing from 1st of May, April month's general borrowing interest will not be added to the cost of the asset. It has to go to P&L. Why? For a general borrowing, the capitalization starts only from the date of spending, not from the date of borrowing. I hope you guys got it. Going slightly forward, then we'll discuss when do we start capitalizing, when do we pause capitalizing, when do we stop capitalizing. Start date will be based on these conditions. Conditions number one, expenditure should be started for developing the asset if you are building it. If you're buying it, expenditure should have been incurred to buy the asset. Next one, borrowing cost should be incurred, meaning you should have borrowed that money, interest computation should have started. And if in case you have not purchased the asset, if you have if you have not developing the asset, if you have purchased the asset, the process of purchase and installation should have started. If you're constructing the asset, process for construction should have started. So basically, expenditure should be incurred, construction or installation process should have started, money should have been borrowed, and interest should have been started. Only then you can commence the capitalization. When do you stop capitalization? When the asset is ready for its intended use. In between, if there is place where you pause the development of the asset, you are allowed to suspend, meaning basically temporarily stop capitalizing. Let's say the asset construction is happening over 18 months. After about 9 months, you've taken break of 2 months. This 2 months interest, instead of adding it to the cost of the asset, you can choose to transfer to P&L. If you choose to transfer to P&L during those 2 months, that is called suspension. After those 2 months, when you again start the active development, again you can start or again you can continue capitalizing. However, if the delay is necessary for the construction process, we took the example of you building a bridge over the sea. During the high tide season, 2 months, you don't do active development. That is part of the process. During those months, you don't stop capitalizing. You continue capitalizing. Those 2 months also will be capitalized. You get what I'm trying to tell? Then we have the last part of our standard, which basically deals with exchange difference. See, we all know that we will take the loan at the place where the interest rate is less. Let's say I have purchased one asset. To purchase this asset, qualifying asset, I want money. That money, what I want, can be either taken as a borrowing from Indian bank or from a foreign bank. I would take it as a borrowing from the country where the interest rate is less. Let's say in India the interest rate is 8 and in foreign country the interest rate is 2. It's so tempting to borrow the money in the foreign country. I borrowed the money in the foreign country. On that foreign currency borrowing, let's say dollars, let's apply foreign currency exchange rate and let's apply foreign interest rate. Foreign currency borrowing multiplied by interest rate in the foreign country multiplied by closing rate of exchange will give me actual borrowing cost, which should be taken here. That is actually my borrowing cost. There is no doubts in that. But what has happened is between two countries, exchange rates move because of the interest differential between two countries. In India, if the interest rate is 8 and in USA the interest rate is 2, exchange differences will move in such a way that this advantage cannot be taken. I'll tell you in short what you should do. There is some additional borrowing cost what you should identify. How do you do that? Very simple. Identify how much is the interest that you would have paid if you had taken the loan in India. You get some interest. You identify the interest that you paid because the loan is in foreign country. Compare them. You saved some money. You paid some lesser money as interest. This is point A. You keep it on one side. At the beginning of the year, you had recorded foreign currency loan at the opening rate. Restate that foreign currency loan to closing rate. Then there will be increase in liability. Compare both of them. Whichever is less among both of them will be considered as additional borrowing cost. And that will get added to actual to be found the additional one. In fact, I'll pin a separate link on this video in the description for this foreign currency borrowing to you people. You can watch that to understand this. And from the total increase in liability, we deduct the additional borrowing cost. Whatever is remaining will actually become your foreign exchange difference to be treated as per AS 11. AS 11, foreign exchange difference, AS 11. Part of foreign exchange difference can be treated as borrowing cost that comes under AS 16. Ultimately, at the end, you need to disclose what is the accounting policy that you are adopting, what is the amount of borrowing cost which you are not choosing to transfer to P&L and then which you are adding into the cost of the asset needs to be disclosed separately as disclosure requirement. Did you get this?